The stock market opens. Screens flicker green, then red, then stabilize. No chaos, no mass sell. No headlines, screaming collapse. Banks remain calm. Consumers do not rush. Governments do not scramble. For the first time in modern history, a shock hits the global economy and nothing breaks. This is not because the crisis wasn't real. It's because people understood it. The stock market opens. Screens flicker green, then red, then stabilize. No chaos, no mass sell-offs. No headlines screaming collapse. Banks remain calm. Consumers do not rush. Governments do not scramble. For the first time in modern history, a shock hits the global economy and nothing breaks. This is not because the crisis wasn't real. It's because people understood it. Recessions have defined the modern world. The Great Depression, the oil crisis, the 2008 financial collapse, the pandemic shock. Each time the pattern repeats. Fear spreads faster than facts. Poor decisions multiply. Small problems become systemic disasters. But what if the true cause of recessions was never markets alone, but misunderstanding? What if universal financial literacy eliminated recessions entirely? Imagine a world where financial education is as fundamental as reading and math. Every child learns how interest compounds, how debt behaves under stress, how markets cycle, how panic destroys value. Not just theory, practical survival knowledge. In this world, money is no longer mysterious, and ignorance is no longer exploitable. Financial literacy does not make people rich, it makes them resilient. When people understand risk, they do not overextend. When they understand cycles, they do not panic. And when millions of individuals behave rationally, the entire system stabilizes. This isn't about stock tips, it's about behavior. People understand why bubbles form, why crashes cascade, why debt amplifies pain, why liquidity matters more than profit in crises. They know that recessions are not sudden events. They are slow chains of bad decisions. Historically, recessions are emotional events. The Great Depression wasn't just market failure, it was mass panic. Banks collapsed because people ran. Businesses failed because consumers froze. Governments reacted late because the public didn't understand the tools. The 2008 crisis followed the same script. Complex financial products, poor public understanding, widespread fear. Ignorance accelerated collapse. In a financially literate world, debt loses its power to destroy. Households avoid variable rate traps. Businesses maintain emergency liquidity. Governments borrow strategically, not emotionally. When interest rates rise, people expect it. They plan for it. Defaults drop. The first domino never falls. In a financially literate world, debt loses its power to destroy. Households avoid variable rate traps. Businesses maintain emergency liquidity. Governments borrow strategically, not emotionally. When interest rates rise, people expect it. They planned for it. Defaults drop. The first domino never falls. Speculation thrives on ignorance. In this world, people recognize warning signs, unsustainable growth, detached valuations, hype without fundamentals. They do not chase blindly. Bubbles still try to inflate, but they leak before they explode. Recessions feed on fear. Fear spreads through misinformation. In a financially literate society, people understand that markets fluctuate. They know downturns are not permanent. They recognize the difference between volatility and collapse, so they don't stampede. And without panic, crashes lose their fuel. Consumer spending is the heartbeat of economies. In past recessions, spending collapsed overnight. In this world, consumers act counter-cyclically. They save during booms. They spend deliberately during downturns. The economy no longer flatlines, it breathes. Banks thrive on complexity. But complexity loses power when customers understand it. Predatory products vanish. Risky leverage becomes unprofitable. Banks shift from exploitation to service. Systemic risk shrinks. Today, people fear inflation but don't understand it. People chase returns without understanding risk. People react emotionally to headlines in this future. Inflation is anticipated, risk is priced realistically. Headlines lose their power, the economy becomes boring. Boring is stable. Political pressure often worsens recessions. Emergency policies rushed, stimulus misdirected, austerity applied at the wrong time. In a financially literate society, voters understand trade-offs. They demand precision. Governments act slower, but smarter. Recessions often begin with misallocation. It's too much capital in the wrong places. In this world, investors understand fundamentals. Capital flows adjust earlier. Corrections happen quietly. Pain is spread out instead of concentrated. Some shocks are real. Wars, natural disasters, resource shortages, pandemics. Financial literacy cannot prevent everything, but it changes the response. A shock becomes a recession only when systems fail. Financial literacy keeps systems functioning. Supply chains adjust faster. Businesses pivot earlier. Governments coordinate better. A shock hurts, but it doesn't spiral. In this world, extreme growth becomes rare. People avoid reckless expansion. Leverage is limited. Returns are steadier but smaller. Innovation continues. But bubbles no longer fund wild experiments. Progress becomes cautious. Mass literacy itself was once rare, so was numeracy. Industrial societies thrived once people could read. Economic stability might follow the same path. But education has always lagged behind power, because ignorance is profitable. Predatory lenders, speculative manipulators, crisis profiteers, fear-driven media, its entire industries built on confusion disappear. The economy becomes transparent, and transparency threatens power. Some economists argue recessions cleanse inefficiency. They reset bad investments. But in this world, bad investments are corrected early. Pain is distributed. The system adapts continuously. Recessions are replaced by adjustments. Money stops being taboo. Children grow up discussing risk. Families plan generations ahead. Societies think long-term. Short-term panic no longer dictates policy. Financial literacy shifts responsibility. People can no longer blame the system. Bad decisions become visible. Freedom increases. So does accountability. Not everyone wants that. What if financial literacy eliminated recessions? What if financial literacy eliminated recessions? The world would still face hardship, but hardship would be navigable. The economy would no longer collapse from fear. It would bend, adapt, recover quietly. Because the most dangerous economic force has never been debt, or inflation, or markets. It has always been misunderstanding. The world would still face hardship, but hardship would be navigable. The economy would no longer collapse from fear. It would bend, adapt, recover quietly. Because the most dangerous economic force has never been debt, or inflation, or markets. It has always been misunderstanding. If understanding money could stabilize the global economy, what happens when understanding power becomes universal too?